The Intelligent Investor by Benjamin Graham, first published in 1949, is hailed as the Bible of value investing. Its principles have guided investors for decades, emphasizing the importance of long-term, fundamental analysis over speculative, market timing strategies. The book is not just a guide to investing, it's a comprehensive philosophy for financial security and wealth building. Below is a summary, followed by key takeaways, analysis, personal comments, and suggestions for further reading. Summary. Graham's central thesis revolves around the concept of value investing, investing in securities that appear underpriced by some form of fundamental analysis. The book is divided into several parts, each focusing on different aspects of investing. 1. Investment versus speculation. Graham delineates clear boundaries between investing and speculating. An investment operation is one that, upon thorough analysis, promises safety of principal and an adequate return. Anything else falls into the realm of speculation. 2. The investor and inflation. He discusses how investors can safeguard their portfolios against inflation, suggesting investments in stocks as a way to preserve purchasing power over the long term. 3. A century of stock market history. Graham presents an analysis of the stock market's performance over time, emphasizing the importance of historical perspective for investors. 4. The defensive investor. This section is tailored for the passive investor, focusing on portfolio management strategies that minimize risk. Graham recommends a diversified portfolio of stocks and bonds, with an emphasis on high-quality securities. 5. The enterprising investor. Here, Graham addresses the more active investor willing to devote time and energy to achieve better-than-average returns. He discusses various strategies, including looking for undervalued stocks or special situations. 6. Portfolio policy for the enterprising investor. Graham expands on the strategies for the enterprising investor, including detailed advice on selecting individual stocks and bonds. 7. The investor and market fluctuations. Graham teaches how to interpret and react to market fluctuations, advocating for a disciplined approach that ignores the speculative market noise. 8. The investor and his advisors. This section offers guidance on how to choose financial advisors and the role they should play in an investor's decision-making process. 9. Security analysis for the lay investor. Graham provides basic techniques for analyzing stocks and bonds without the need for a financial background. 10. The intelligent investor and inflation. The book concludes with strategies for protecting against inflation, emphasizing the role of real assets like real estate and stocks. Key takeaways. Margin of safety. Perhaps Graham's most crucial contribution is the concept of the margin of safety, buying securities at prices significantly below their intrinsic value to minimize the downside risk. Market as a voting machine. In the short term, the market behaves like a voting machine, but in the long term, it acts as a weighing machine, reflecting the company's true value. Investor psychology. Graham places significant emphasis on the psychological aspects of investing, advising against the herd mentality and emotional decision-making. Analysis and comments. Graham's The Intelligent Investor remains remarkably relevant today, despite the many changes in the financial markets since its first publication. Its core principle, that a disciplined, value-oriented approach to investing will outperform speculative strategies over the long term, has been borne out by the success of numerous investors who have followed Graham's teachings, most notably Warren Buffett. Suggestions and further reading. For those interested in exploring more about value investing and financial wisdom, consider these books. Security Analysis by Benjamin Graham and David Dodd. This is the more detailed counterpart to The Intelligent Investor, offering an in-depth look at Graham's investing principles. Common Stocks and Uncommon Profits by Philip Fisher. This book complements Graham's value investing with a focus on investing in growth stocks. One Up on Wall Street by Peter Lynch. Lynch offers an approachable take on how average investors can beat the market by using what they know. The Essays of Warren Buffett, Lessons for Corporate America, a collection of Buffett's letters to Berkshire Hathaway shareholders, offering insights into his investment philosophy and strategies. In summary, The Intelligent Investor is not just a book about investing, it's about adopting a rational framework for making financial decisions that will stand the test of time. Its teachings are invaluable for anyone looking to navigate the complexities of the financial markets with confidence and discipline.